Hello and welcome to the second edition of Honigman's Coffee and Counsel. I'm Adam Rothstein, co-chair of the real estate department at Honigman. Honigman is a full-service business law firm with offices in Detroit and throughout Michigan and in Chicago. Today, our guests are Mike Shapiro and Stewart Mandel, partners in our real estate tax appeals group. We're going to talk about real estate tax appeals here in Michigan. Mike has been with the law firm for more than 40 years and is the Dean of Real Estate Tax Appeals Lawyers in Michigan. Stewart has more than 35 years of experience appealing real estate taxes for a wide range of commercial property owners. It is not an understatement to say that both Mike and Stewart have achieved millions of dollars of savings for our clients. But first, our disclaimer. Listening to this podcast shall not create any attorney-client relationship with any listener and the law firm Honigman LLP. Gentlemen, we are nearing the end of June. Isn't this an odd time of year to be talking about tax appeals for commercial and industrial real estate? Michael?
Yes, it is. Thank you. It certainly is. The appeal deadline for several years has been May 31. However, this year there were problems due to the pandemic in taxing jurisdictions getting out information to taxpayers. And information that's usually available online was not available. Thus, a lot of taxpayers were left in the dark as to what their assessments were or are for 2020. We've taken action on this, and as a result, the legislature unanimously passed a bill to remedy the situation. On June 11th, Governor Whitmer signed a bill to extend the appeal deadline to August 31. This is a one-year extension, but we encourage taxpayers to take advantage of it while it exists.
In other words, this is just an extension for this year, for 2020, not going into 2021, right?
That's correct.
Right.
That's
So we're back to a May 31 deadline in 2021, right?
Unless
and this
the-
is
that's right,
this
unless
is-
the legislature takes further action.
and we're talking about commercial property. This has nothing to do with residential, just to
Right,
be
commercial
clear.
and industrial real estate.
Right. So Stewart, does the new law change anything about the tax appeal process?
So other than the timing, the August 31 deadline, everything's pretty much going to work the same way. The timing will be a little bit different for these new appeals that are filed in June, July, and August because they're filed later. Their initial tribunal deadline is going to be later. Some of the cases we filed back in April already have December appraisal deadlines. Obviously, cases being filed now are going to have deadlines next year. But the key to these appeals is going to be the same, whether we filed them in April or we file them in August. It's a question of whether the assessor's market value, how the assessor valued the property, comports with Michigan law, or whether it's excessive. So business as usual in terms of pursuing these appeals.
That's good to hear. Something business as usual. Michael, what should taxpayers know about the process?
Well, the process begins actually before the appeal is filed, and that requires an evaluation of the property to conclude to its true cash value under Michigan law for 2020 as of 12/31/19, and looking forward to 2021 as of 12/31/20. And there are various nuances under Michigan law that have to be considered in determining market value. For example, are we looking at contract rent, or are we looking at market rent for an income producing property? And does the owner of the property or the tenant of the property affect its value? There are a number of issues that have to be looked at using Michigan law as the basis for determining market value.
So Stewart, when we talk about evaluating a property's value, how do we do that? And what's the difference between the taxable value and the assessed value that you see on your tax bill?
So many taxpayers know that there are three traditional approaches to value. There's a cost approach, which is based on cost. There's the sales comparison approach, where we look to the market, we look at what comparable properties have sold for, and then there's the income approach. Usually with the kinds of properties we're dealing with, the commercial and industrial properties, the greatest weight is going to be put on the sales comparison approach or the income approach. So what we do is gather information. Sometimes it's doing an income approach on income producing property. Other times it's trying to find sales of comparable properties. And to get back to your question about value, so the assessed value is supposed to be half of market value. That's always true. The taxable value can be very different from the assessed value because under our constitutional Proposal A amendment, there's a cap on taxable value. As of the end of last year, we were seeing a lot of properties where there was pretty big spreads between the taxable value and the assessed value. And, that's something else we'll want to consider as we evaluate how strong an appeal is. But sometimes taxpayers, for example, if a taxpayer is looking to refinance their property, they may want to appeal the assessed value, even though they're okay with their taxable value. So that's part of the analysis we do when we take a look at these properties.
Great. Michael, are there any particular types of properties that warrant extra scrutiny this year or any other year?
Well, obviously, all properties should be reviewed each year. And you go through different cycles where some types of properties are more subject to appeal than others. That said, we know that some sectors have suffered significantly in recent years, particularly the retail sector. And that includes retail properties, individual properties, as well as shopping centers and malls. The competition from e-commerce has had a devastating effect on retail properties. We're also seeing that there's been some decline in hotel values, which have been having difficulties in recent years. And in the future, in particular, we can expect office properties to see significant vacancies. I read an article recently where large office tenants, on average, have 4-year leases. Well, those leases are becoming due, and the expectation is going to be that there's going to be a lot of less space leased out, and that affects the value now of office properties.
So, Stewart, what else should taxpayers know about the process? Just getting back to that for a moment.
I think taxpayers need to have realistic expectations about what's going to happen with these appeals. The folks in government are very concerned about their revenue. There could be cuts to their budgets because of actions taken in Lansing. And so we're going to have to be able to make the case for value reductions. It's not going to be a situation where we file an appeal and the government will quickly offer some type of reductions. We're going to have the burden of proof, and it's going to be a process that's going to take time to persuade the government that the reductions are in order.
Yes. So, Michael, given all of that, how does Honigman fit into the process?
Well, we have a team of attorneys and other tax professionals, including a former chairman of the Michigan State Tax Commission, a former tax tribunal judge, and we together have been handling property tax appeals for decades. We've tried and won many cases in the tax tribunal and have a very good knowledge as to what it takes to be successful on appeal. We, of course, start the process with this team by evaluating if an appeal is warranted based on the true cash value of the property. And with much of the work being done on a contingency basis, we do this work at no charge for consultation. And then when warranted, we, of course, file an appeal, and we, in most cases, are successful in negotiating a settlement that's acceptable to the owner. In some cases, however, the cases have to be tried. We've handled many such cases successfully, including appeals in the tax tribunal and then on appeal to the appellate courts, where we've also been successful.
Yeah, that's great. So, Stewart, has Honigman been able to make a difference for its clients?
We have, very much so. We've saved our clients hundreds of millions of dollars over the years. We've obtained a number of very significant favorable rulings. For example, the firm going back handled the very first office building appeal that was decided using the income approach. We handled the case, really an important case, because it ruled that you have to look at value in exchange, not value in use. That's really important, because there are a lot of properties that have great value to the owners, but when they go to sell that property, it's simply not going to have as much value to other market participants. And then we're also well known in the area of big box appeals, owner occupied properties. We handled the first big box case where the tax tribunal decided how you value these kinds of properties that were not being leased. And there's been tremendous litigation in this area ever since.
So, Michael, is there anything else taxpayers should be thinking about?
Well, we of course hope that the pandemic will be over soon. It's unfortunate for everybody. However, if it does continue, and we expect it, unfortunately, it will continue for some period, it's going to take a toll on property values in many sectors. Obvious ones are hotels, office buildings, and retail, but it's going to affect other properties as well. And taxpayers should recognize, as they did during the Great Recession, that this is an opportunity to reduce taxes not only for the current time, but for the future as well. So they can take a bad situation and make the best out of it that they can.
Well, this has been very informative. I want to thank the two of you and thank our listeners for joining today for Honigman's Coffee and Counsel. Sometime in the next couple of weeks, we will be releasing another edition of our Coffee and Counsel series, and our topic will be income producing real estate during the pandemic, opportunities or disaster. Until then, this is Adam Rothstein saying wash your hands, wear your mask, and stay healthy.